S&P 500 tests first support for the third time in 2 months. I will show you what that first support is. President Trump orders fresh attacks on Iran after the markets have closed on Friday, which makes me think something will happen on Monday as well. The pervasive weakness in AI and semiconductors weigh on the markets still. I'll show you those charts. The 30-year Treasury yields has finally hit a 19-year high, which is the highest since before the 2008 financial crisis. We'll look at both of those briefly. Home builders are also entering a caution phase as consumers are faced with higher mortgage rates. We'll look at US dollar versus Japanese yen, and I think the Bank of Japan has indeed intervened in the forex market, and this has sunk the dollar. We'll look at gold's response as it remains muted. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, July 31st, 2026. Don't forget to like, share, and comment on this video. That's what keeps this channel going. Thank you for all the shares, likes, and comments I've been getting. If you're a subscriber, stay tuned. We'll be covering various ETFs, some of the large cap stocks, as well as a few of the speculative securities, which I'm sort of reluctant to trade because of the volatility right now. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com. Sign up for one of the products. So throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which are available for TradingView.com. This is a TradingView.com interface. Green, blue, red, and yellow lines are my lines, and they're available on MasterChartsTrading.com. All right, so as I was about to record the video, I looked at Wall Street Journal, and I saw this after the market closed. There was an announcement that there will be attacks on Iran over the weekend. So this definitely is, an attempt to have an event over the weekend, and then the market's reaction by the time Monday open comes around, or actually Sunday evening in the United States open comes around, it's not as big of an issue. Perhaps it still will be a big issue. As far as the support that I was referring to, so I'm looking at this green support resistance line. Notice there's this 1, 2, and 3 instances that the support has been tested so far. First around early June, then again late June, and now again around late July. This is especially combined with this attack on Iran news, makes me think that on Monday we will actually gap down and might actually take out this low, or possibly even this low from early June. Not a great news, obviously, but this is what we have. This is what we have to deal with. I mean, we're still near records, technically speaking, and other than that, there's not much to say about this particular chart. We can also look at the 4-hour chart, and you can see how volatile has the trading been for the past months, pretty much. We couldn't really get very high, we couldn't get very low. There was a bunch of, this is a 4-hour chart, so each candlestick is 4 hours worth of activity. There was a bunch of attempts to go higher. Finally, we had an attempt to go lower here on the 29th yesterday, or rather the day before on Wednesday, which sort of failed. Notice again it got stuck to the yellow line. So very meaningful lines. And then today, or rather yesterday and today, we saw a big rally and an attempt to go higher, which also didn't really go anywhere, because notice this candlestick from the very last 4 hours of this week really also didn't go anywhere. So there is a lot of back and forth, but there is really not a lot of movement, so to speak. So we will just wait and see what happens with this Iran thing over the weekend, and see where the stocks will go Monday. Robotics and AI. This is an ETF. It's a global robotics and AI. So I looked up the holdings for this ETF. It's ticker symbol BOTZ. And there's like maybe 2 or 3 United States companies in the top 10 holdings, and the rest are from elsewhere. China or Japan, Taiwan, maybe South Korea, something like this. This has been under pressure already since May. So notice that it peaked out in May versus S&P 500, which peaked out in June. So definitely we're seeing this being under pressure. In fact, we're very close to a bear market. So currently it's in caution phase, but if it closes below the yellow line, and it almost did here on the 28th of July, on Tuesday, this Tuesday of this month, of this week, this would have been another bear market for a relatively major sector globally, though not necessarily domestically in the United States. So this is a pervasive weakness from artificial intelligence and robotics. There's really not yet an artificial intelligence ETF, because there's not that many companies that are public. For example, ChatGPT or Anthropic are not yet publicly traded companies, although they have filed to go public. I believe at least Anthropic did. So yes, definitely there is weakness in that sector. The semiconductors also, this is SOXX Semiconductors, are also under pressure. They also peaked around 22nd of June and pretty much have been under pressure, coming down, and not really contributing that much to the overall market. I mean, they're currently at this blue support resistance line, which is support, technically speaking, but the way it's acting, I don't see a very strong bottom here yet. And once again, because of the renewed hostilities in the Middle East, this could just completely unravel for any reason or for no reason. This happens quite often. Switching gears, we're currently looking at Treasury bonds. So Treasury bonds also have been under severe pressure, especially the long-dated ones. These are 20-plus year Treasury bonds. So they were already in an avoid phase, on 23rd of July here, and notice we just made a new low. We can also look at the 30-year Treasury bond yield, and this right here is a 19-year high. So we're currently at 5.27, which is a 19-year high. So we can look at the same chart on a little bit on the longer time frame. So we're currently looking at weekly candlesticks. So each candlestick is a week's worth of activity. This is a 19-year high. Notice that we have exceeded this previous high from 16th of October 2023, and this pattern is sort of like an inverted cup, maybe something of that nature. I'm gonna come on. Not sure what's going on. I can't for some reason grab this tool. I'm gonna try to reload the page just a second. Okay, let's try again. So yeah, this pattern right here, this is a very bullish pattern with a depth of about 30%. So if this pattern actually plays out, we could see a move towards, for the 30-year yields, up to 6.5%. So most likely this would imply that there is either inflation expectation, or the creditors just decided not to lend to the United States government and demand significantly higher yields. Entirely possible. Each one of them is entirely possible. But to look at it from a longer term perspective, I just want you to see where this rate has been in the past, and this is 2007, January 2007. So we're basically back where we saw the crisis, the financial crisis of 2007, 2008, 2009. So let me show it to you on a combined chart. It's a little bit unclear here. So the upper part here is S&P 500. The lower part is the yield, the 30-year yield. There is that crisis. I'm going to zoom in on it. It's kind of hard to see, obviously, but there it is, S&P 500 around, topped out here and around 2007 and then collapsed into 2009. Notice that the yields also collapsed or were lowered. So possibility number one is that we're going to see a crisis of some sort, and as a result, the Federal Reserve will be forced to lower interest rates. Possibility number two, we may not see a crisis, and for some reason yields continue higher, or perhaps there is a crisis but of a different nature than what we had in 2008. There's no way to tell, obviously, but it's just very interesting that we've finally, the rates are actually back to that same level that we had right before the crisis of 2007, 2008, 2009. Makes you wonder. Okay, as a result of all of this, interest rates going up, mortgage rates are obviously hitting new highs, and Homebuilders, XHB, are under pressure, and they're back into caution phase. So they were temporarily on a buy signal, but now we're back into caution. And if this continues, if we continue to climb, if the interest rates continue to climb, then Homebuilders will likely come under further pressure because people just can't afford houses, because of this huge amount of money they have to pay to the bank because of the mortgages. So that's another interesting thing to consider. So we're seeing some sectors currently within the stock market that are acting still quite bullish, but at the same time we're seeing some sectors within the stock market that are actually outright in a bear market. And last week I highlighted this sector, communication services sector, XLC, with such big names, Meta Platforms and Alphabet. Although Alphabet, Google, technically speaking itself is not in a downward spiral, but Meta is, and Disney as well. It's in the same ETF. So some of those sectors are, some of those stocks are, doing quite poorly. So this is a major sector also of S&P 500. So if it's in the bear market suddenly, it makes me start to think about the rest of the markets as well. So let me know what you think about this interest rates, how they relate to your life in the comments as well. Okay, let's move on to another chart of interest that I was talking about just a few weeks ago. I was talking about it right there around early July, late June, as I was saying that we're about to hit like multi-decade highs. This is actually USDJPY. This is a multi-decade high. Let me see how far back we're going. Because it's pretty amazing actually. Yeah, we just hit a 40-year high, because the last time I think we saw this was in 1986, and it's already 2026. So this is actually a 40-year high now for the US dollar versus Japanese yen. So it's the opposite for the yen. It's a 40-year low for the Japanese yen. I mean, we have to really go back to the 1980s here. And as I was saying, that something is about to crack, and lo and behold, the other day I was reading in the newspaper, in the Wall Street Journal, that yes, indeed, the Bank of Japan has most likely acted right there on the 30th of July. And it was not just rumors of acting, it's actual support of the yen by the Bank of Japan. And then probably more today, but actually today I read that the United States Treasury, Scott Bessent, the Treasury of the United States, said that they stand ready to help support the yen. So we're looking at some pretty coordinated action to prevent yen from collapsing even further. Go figure. So right now we're seeing, the yen really has come down, but it has still, technically speaking, is in an uptrend. So if we see a touch of this blue support resistance line, then we may want to consider buying this currency pair. In other words, buying the dollar using Japanese yen, so in favor of US dollar. For the past 2 days, we're just seeing, this action by the central banks. Let's see how serious they are. Maybe they will, continue intervening. Maybe they won't. Who knows? But this led to the dollar. This is dollar currency index, ticker symbol DXY here on TradingView. Notice the dollar actually, I thought we were going to break out. I thought here last week I was saying, looks like we're imminent. Fresh 52-week highs are imminent. But then this intervention came this week, and actually the dollar has lost against other currencies as well, against euro, New Zealand dollar, these big candlesticks. So GBP, USD, same thing, British pound. So pretty much across the board, the dollar is under pressure for the past few days. Technically speaking, dollar is still in a bull market. So once again, if or when we touch this blue support resistance line and then close back above it, then that would be a sign to buy the dollar. But then if we drop a little bit lower into the bear territory, so we're not that far away. If that happens, then I definitely would not be buying the dollar. I would be selling it and buying other currencies. So at this stage of the game, we're just looking at further few days. I think Monday this will be resolved, because at the very least we'll probably touch this blue support resistance line. It's so close now. Once we touch it, we'll see where this is going. It seems like this intervention is for real. So we're watching this closely, as they say. Having said that, the gold barely reacted. So if look at how big the move is in the dollar, this week, and gold, nothing happened. It just traded sideways. So normally, when U.S. dollar is gold is traded in U.S. dollars, so U.S. dollar just got weaker. So gold should have gained significantly, and it didn't. So again, go figure. We're, as they keep saying right now, the word of the past 2 years is unprecedented, and we're seeing unprecedented stuff happening. So this is unusual, very unusual, for dollar to move this much, and gold, nothing happened to gold basically. Which makes me think that gold is probably about to go lower, and right now we're still in a bear market for gold. So if dollar again regains an upward trajectory, then I think gold's fate is sealed, and I think we will continue lower. We already came down quite a bit. Previous highs were like at almost 5,500. We're already at 4,000. That's a significant drop in just a few months. I was actually showing this as far back as January, I was just saying that, you know, this type of candlesticks do not just go away. I mean, we have a rejection candlestick, big red follow through, you know, a bounce and then another low leg lower, then another leg lower. So we're seeing basically, you know, classic kind of topping pattern and then the entry into a bear market. Entry into a bear market occurred right there where I'm hovering on 9th of June 2026, because we closed below this red support resistance line. Again, you can find out more about the lines at my site. So right now I am just a little bit confused about the way things played out. So again, this could be because of intervention and not really about fundamentals. So the dollar, the weakness in the dollar didn't really translate in strength for gold. So let's see again what happens Monday, but it does not look good for gold right now. That's it for this week's recap. Please head over to MasterChartsTrading.com. Click on sign up for one of the products. Again, I have this trading indicators. These trading indicators are this green, blue, red, and yellow lines available for TradingView.com. You can use it to pretty much trade anything under the sun, from stocks to the commodities to gold, on pretty much any time frame. For example, this is a 4-hour chart, so you can use that. Newsletter, I send out daily alerts and weekly members only videos. For example, this week we will be covering lots of ETFs, some of the large cap stocks, as well as some speculative securities in the members only video, and then I daily send out the alerts as well. And best deal is to get both trading indicators and newsletters on the yearly, for the yearly subscription. You could also get the monthly subscription, but for the yearly you save 17%, so that means you get 2 months free equivalent price. That's it for this week's recap. Please don't forget to hit the like button, share this video, like this video, make the comment, even put thumbs up in the comment section. Thank you for watching. Have another great trading week. Bye-bye.